Hey guys, welcome to today's session. How are we all doing? It feels late today, although it's not even that late. Maybe it's this week and the market taking its toll on me. I don't know. I don't know if anybody else feels that this week. Just battered and bruised already. Bit of a volatile week. Let's just put it that way, or at least a volatile couple of weeks. No, probably a week since last Thursday. Going to give everybody a minute to join, and then we'll jump straight in. Going to do another strategy development session today because I think there was quite a few people who was on the stream yesterday, but we didn't quite get around to analysing everybody's Darwin. So, welcome, guys. Can see people starting to jump in. If you was here yesterday and you didn't get a chance to have your Darwin analysed, feel free to pop it in the chat today, and I'll be happy to go over any that we missed yesterday. And look at this. Every sell-off just getting bought straight back up. Like, this range is just... How we doing, guys? Welcome. What's going on in the crypto world? I mean, that is just disgraceful. What did that go down to? This is on Binance, right? 13% in one candle. Like, no, that's a lie. 11% in one candle. How far from the top? 20%. Nice 20% pullback there. Thing is with that is like, how do you then trade this chart? Like this structure is just disgraceful. Tail, welcome, dude. Handsome as always. Leo Christopher, good afternoon. How we doing? A Manipuri guy. Hi, how are we doing? Long time no see. Indeed, dude. I mean, I've been here every Tuesday, Wednesday, Thursday. I see so many of you guys, and then when you don't turn up and then you turn back up a month after, it feels like it's been a whole lifetime since the last time we spoke. Hope you're all good though. Hope everyone's all good. As I said when I started the stream, if you was in yesterday's strategy development session and we didn't get a chance to review your Darwin on stream, feel free to pop it in the chat today and we can go over it today. That level, that's stunning level. I sometimes miss manual execution when you see price action like that. When you see, because I used to trade inverse levels like this, so I'd be looking for something like a round off up there, clean breakthrough, which is what happened. Arguably, you had a bit of a touch back to the level there, but nothing major. And then you get a round off there. Like, that is just phenomenal. And that makes me miss manual trading, but damn, I don't think I'll ever go back. Tal says, I keep getting added or message requests about Darwin via Discord if you pay and stuff. I know you can turn it off, but I find it funny. Yeah, I mean, I presume you mean like scam messages where it'll be a fake account of me offering some premium service or something. Like, there's so many of them, and I mean, I ban people on a daily basis, right? And they still just whip up a new account and they're straight back into it. It's super frustrating. I also increased the security and all of the measures to get into the server because the problem is with a free server, it's difficult to police it because you want traders to come in, right? You want, obviously, as a business, like the Discord is a fantastic funnel for leads. So people will come in, learn a little bit about the product, speak to traders, understand their experience. So it's a great funnel for us. But that, of course, comes with the inevitable effect of just Discord scammers pounding, at the door of everybody's direct messages. I even get, and this is ridiculous, right? I even get fake accounts of me messaging me, and I'm like, are you stupid? Like you've literally got my profile picture and my name, and you're messaging me about a scam. It just makes no sense. How we doing, guys? Hi, everyone. Hello, welcome. Not even you, just regular people who are in Discord, but just try to DM. Yeah, you get some people and they're like, are you funded here, bro? How much have you got, bro? I have an EA that can get funded for you, bro. Oh, Christ, leave me alone. Anno, hello. How are we doing? If I'm not mistaken, Anno, you asked for a deeper review today, right? You're gonna have to jog my memory of your Darwin, though. I've slept since yesterday, so I don't have a great memory as it is. XAQP. Boy. Big one for you, Tyler, that is. How long we got? November and December. 2 more months until we're in gold, as long as we don't get a big fat dump over the next couple of months. Fulfillment, man, good luck with your chest situation. Appreciate that, dude. Thank you for the excellent content, as always. Could you please tell me a bit more about the CEO situation, or is it too early to ask? Thank you. Well, thank you firstly for saying good luck with your chest situation. Today is actually the first day, funnily enough, that I haven't had a single feeling in my chest. The recovery time is roughly about 3 weeks, and it's been 3 weeks, so that's a positive sign. I think I can probably get back to exercising this week, because even when I was out walking, like walking my dog, I was getting pain in my chest. It was just awful. I appreciate your kind words about the content too. I'm trying to make them more, at least the streams, I'm trying to make them more sort of relaxed. I mean, look at me. I'm like leaning back on my chair. There's no presentation. We're trying to make it a little bit more entertaining for you guys. So I appreciate that. But in terms of the CEO situation, I'm not 100% sure what you mean. If you could ping another comment in, and then I'll be able to answer your question. I know, just ping in your Darwin again, and I'll load that up. We'll do yours first, and then I can see Leo Christopher said, could you do a review of my Darwinex PFPE? Thanks. Of course I can. We'll finish off doing Anno's first, and then we'll do PFPE. So if we load that up, PFPE. How we doing, Oskai? Sup, you guys. Sup, back to you, dude. Hope everything is good. VCA. Was this of course. I was getting confused with the other one that we reviewed yesterday. So this is a record that you've had for years, right? But then you've started trading a different strategy since 2025. I remember now. Okay, cool. So for the guys who weren't here, exactly, yeah. So for the guys who weren't in yesterday's session, basically we took a look at Anno's record. And you can see this is from Darwinex, right? This isn't a Darwinex 0 track record. So this is a live account through the Darwinex broker. Hence why it has a 3-letter ticker and says by Darwinex. Now, this started back in April 2021. You traded for, well, it was on and off, right? There's a couple of months throughout the year where you didn't trade. And then again, same again in 2022. And then you took a couple of years off. And then you've been back in 2025 with the same account, which is ballsy. Fair play to you. And then you've sort of picked it back up, and you've had a positive return this month, which is great to see. Tail, the agenda today is just a general strategy development chat. We'll see where the day takes us, dude. I kind of come on these now without an agenda, end up doing strategy development because it's kind of the most requested thing to do. But I'm here to answer questions, here to do whatever you guys want to do. If you want to watch markets, if you want to do strategy development stuff, I'll do whatever. Okay, fulfillment. That's really good to hear that you're doing better. I appreciate that. I mean that Juan Colon will no longer be the CEO of Darwinex, or did I get it wrong? Yeah, that's incorrect. Juan is still the CEO of Darwinex. Javi is still in the company as well. It's their brother Ignacio, who was my boss, who was head of business development. He has left to go work for AWS, which is Amazon Web Services. He's still a shareholder in Darwinex, so he still has active interest in the company. He still helps out and does things. However, on day-to-day activity, of course, he's left Darwinex for AWS. He may be back at some point. We will see. But he's been at Darwinex for 12 years. And for him, it was kind of personal reasons. It felt like need for change. So, yeah, he's at AWS now, at least for the time being. Anna got a beating yesterday, unfortunately. Yeah, I've had a beating this week as well. So no stress there. If I was a guy with 100.81 rating, I'd be happy. Yeah, I actually messaged Javi about that. I'm not sure if he's replying. No, he hasn't read it yet. Because the reason he's above 100, I think 100 was the cap. It's a pleasure fulfillment. Don't worry. I think 100 was the cap on the rating, but because we added the DarwinIA bonus, I don't think we ever anticipated somebody being that high and getting a +3, because their record is I think it's like 2 years or something. So they're getting 3 extra DarwinIA bonus points, which means even at 97 rating, right, they're going to be getting boosted to 100. So if they're over 97, which they are, they're like 97.81. Hence why it's yeah, it's higher. But I'm just checking with, oh, I see my camera's something's going on with my camera. I'm presuming you guys can still hear me. If someone could confirm in the comments you can still hear me, that would be absolutely fantastic. Yeah, the camera. Okay, so you can still hear me. What I'm going to do is I'm going to try and unplug my camera and then plug it back in and see if that sorts it out, because I have no idea what that's doing. Sound okay? Appreciate the comments, guys. Where was we? Yeah, the 100.81. I'll wait for a comment back from Javi. I'm not sure if we'll keep it at 100.81 or whether we'll enforce a 100 cap, but I don't think it'll make any difference, because whenever you get to 100, you're obviously going to be top of the leaderboard. Boom, boom, boom. Camera back on, and we are back in business. I saw there's a little blue light on my camera that started flashing. I was like, that's weird. It never does that. And then I looked at my screen and I was like frozen like this. So yes, hello, how are you? Love the live content. Appreciate that massively. I'm very well. I hope you are too. It's great to have you here. I love doing these live sessions, especially since we dropped the presentations. I just love coming on here and having a chat. This is like 4 p.m. in the afternoon for me. Sometimes I stream at 5. So it's nice after a day of kind of being isolated, because I, you know, as you can probably tell, I work from my bedroom. So I'm here all day in my house, kind of being isolated on my own. It's always great to come on and just chat and you know, talk about markets and stuff and the things that are going on. Getting ahead with Dr. Ojo. Pleasure to have you back, dude. Are you taking over his position? I'm not taking over his position. I worked very closely with Ignacio anyway. So I'm head of UK growth and business development for Darwinex. Ignacio was kind of head of the growth team, right? So we're all kind of working autonomously anyway. There's myself, there's Joanne in Spain, Giorgio, who runs the Italian division, and Nico, who runs the French division. So, and we also have some guys in the LATAM helping out with Joanne, you know, for the Latin American countries. So nobody's really taken over his position. We're just coming together as a team to, you know, work autonomously on our own. Love the picture. Chat with us over chat with the wife. I mean, the wife isn't here, right? The wife's going to win every single time, although she's not my wife yet. That's happening next year. So I'm actually going to be away for 3 weeks next year, because we're going over to America and we're going to get married in the US. So we're going to fly from London to Chicago, spend a few days in Chicago, fly from Chicago to San Francisco, spend a few days there. Drive down the coast to Los Angeles, spend a couple of nights in LA, drive up into Vegas, get married in Vegas, spend 5 or so days there, fly to Florida, have a nice little break for a week, and then fly back home to the UK. So that's going to be 3 weeks where you're going to have to, you know, deal with not having me and not having these streams. So maybe I'll do some pre-recorded sessions, who knows? Or I could just stream from Vegas, you know, I'll stream from the casinos. Today received a mail from Darwinex. Good news for beginners in DarwinIA. Yeah, so if you guys are watching this and you haven't seen your emails yet, we're basically we've enforced a new rule where if a trader doesn't get an allocation from DarwinIA Silver within a 6-month period, this isn't booster or permanent allocations, this is purely just from DarwinIA allocations, then we'll give them a coupon for a free 25,000 euro booster. It's kind of a way to incentivize not giving up and just saying, you know, we know trading's hard. You can start today and still have a positive expectancy. But if, you know, you trade for 6 months, it could just be a bad patch, right? It's not always an accurate representation of your expected value over a longer period of time. So it's kind of our way of saying, keep going, keep working. Here's a little incentive. So yeah, it's great news for people. I'll take over XAQP. Well, the great thing with XAQP, it's fully automated. It's fully automated. So hopefully it's still around then. Hopefully it doesn't do itself in 6 months. Yeah. Your stuff also with Edgewonk and the psychology sessions have helped me massively. One of the best contents online. Will be patiently waiting for you to come back with the ring. I appreciate that. I have a lot of fun with Rolf and Maritz from Edgewonk. They're great guys. And you know, they've been around for a long time doing strategy development. And by the way, Anno, we will get back to your Darwin in a moment. But yeah, I really enjoy working with those guys and coming on doing the sessions, because it's also nice for you guys to get different perspectives and not just have me say the same things every session. It's nice to get, you know, external opinions on stuff, especially from experts. And then the sessions with Sanj, I mean, I'm never in those sessions. I have them playing so that I can manage the session when he's finished and stuff. But Sanjeev is just a fantastic guy. He's a very close friend of mine. And the content that he puts out there is great. I actually feel a little bit like we haven't pushed out Sanjay's content as much as we should have done, because anybody who watches it says how good it is. And I kind of feel like we've underutilized it. So I think I might do some more promotion on that soon, because, you know, we've got a great series there now. And one of the other things that we're looking to do soon is I'm looking to do another podcast, and not just another trader podcast, because they've been done time and time again. And you've got the likes of Chat with Traders or Words of Wisdom, where you're getting, you know, really talented traders, especially now as well, with the changes that Words of Wisdom made 6 to 12 months ago, however long ago it was, where they're getting actual professionals and institutional traders on there. Fun fact, I was on there over 2 years ago as well. So there is an interview with me from like 2023 or 2022. I can't remember. And it's like trying to compete with that. It's very difficult to do so, right? Because the content has been watched, it's been absorbed. We've seen and heard from traders time and time again. And it's kind of like, I will always interview traders because I think the traders deserve it. But at the same time, those conversations have been had time and time again. So with the new podcast, what the idea is going to be is a way for us to publicize some of the private conversations that we have. And what I mean by that is some of the, obviously we're on the, whether you class us as an institution or a business, corporation, however you want to think of Darwinex, we have conversations and we work with liquidity providers, market makers, capital raisers, all of these different people, and we have active conversations with them on a regular basis. Even me, you know, I'm talking to these sorts of people. And what we've decided is that, well, we're trying to empower traders to be the best trader that they can be. Now that comes into, or it stretches further than just being the best trader, as in taking the best trades. How do you position yourself for success in the future? How do the markets actually operate from an institutional perspective? How does a market maker work? You know, because if you go onto Twitter, you can find underqualified individuals talking about market makers hunting stops, yada, 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 or this is what you need to do to find an investor. And then when you have a conversation with an actual professional who's been doing it for 20 years, you go, oh, actually, I you know, thought the complete opposite to this. So of course we need to ensure that the guests to the podcast are happy for some of the conversations that we have to be publicized. But I think it will bring a light to a lot of things in this industry that haven't been done before. You know, I have a very close friend who's a market maker, or who was a market maker. And some of the conversations I've had with him, everybody should hear them, because it would nullify a lot of the nonsense that you hear from ICT traders about market makers hunting for retail stops and all that sort of nonsense. And you know, these conversations need to be publicized so that people can ingest that information. So that's something I'm super excited about. I will be the host. I will be leading that podcast as well. So it will of course be Darwinex branded. It will be Darwinex. I will just be the host, but I'm really excited for some of the conversations that we have there, and really excited to get it out to you guys as well, because again, it will be different. But it will also be valuable, not just a trader saying, well, this is what you need to do to be a successful trader. Everybody knows that, and everybody knows there's 1,000,001 different ways to be successful, but not everybody knows how to raise capital. Not everybody knows what market makers do. Not everybody knows what a prime broker is, or how liquidity provider generates prices for a broker, right? A retail broker. So there's a lot of things there, or even talking to fund managers, you know, somebody not necessarily who trades, but somebody who has the ability to find high quality trading talent, allocate capital to them, and grow a fund. Because all of these different things are individual skills. I know plenty of traders, myself included in the past, who go, I can trade, I've got a track record, now I can build a fund, now I can do this. And whilst it's possible, you have to be a specific type of person. The raising capital is a full-time job. You have to be a great salesperson. Typically, most traders aren't great salespeople, just typically. Then you have the infrastructure side. If you want to build a business to be a broker or a liquidity provider, guess what? You need a lot of money. You need a lot of development experience or the ability to hire people. So you need to be a natural born leader. Again, not everybody has that skill set. So when you're a trader, it's kind of like, okay, what do I need to learn? I already know how to be a trader, but the skills that I don't have. Anyway, rambling on about that way too much. One reason to improve the trading. One more reason. Yeah, exactly. Congratulations. Appreciate that. Fernando Vargas. Hi, bro. How we doing? Can I connect my Signal account with my FX book? I want to watch some metrics. You can indeed. You can connect it with my FX book. I prefer to use FX Blue. My FX book, they made a change about 2 years ago where you have to pay to have them update your account on a regular basis. And what I found was when they made that change, the automatic updates started to happen much less frequent. So I think my last update on my MyFX book was like 13th of September, which is over a month ago. So I use FX Blue because it updates every few hours. Maybe you're like 8 or 10 hours behind, but it updates much more frequently. Fulfillment, can't wait. Yeah, I'm super excited. I want to also do like roundtable discussions. So it's not gonna be a podcast where it's me going, also, how does this work? Blah blah blah. Tell me. It's going to be a discussion. We're going to do roundtables, get different people in from the industry, do ones with Juan Calan, all of these different types of people. It's going to be in person. So the quality is going to be far, far better than, just sitting on a Zoom call and recording it. So I'm super, super excited about it. Yeah, we're going to do it proper. Lefair, I hope I'm not butchering how you say that. Lefair Capital Network. Hey man, hope all is well. All is good on my end, dude. Hope it's good for you too. Been in a drawdown over the last 3 months. Do you recommend resetting and starting fresh, or shall I try and pull it out of drawdown and keep my current Darwin? Many thanks. There's a little bit more context needed to that. So how bad is the drawdown? How long is your record? Are you currently managing any capital? It'd be great to be able to see your Darwin. Because I usually say no, it's not worth resetting. But now I try and get a bit more context on it, because if you've got a year-long track record and it's 3 months in drawdown, I'd say there's no point resetting it. Whereas if you started 3 months ago and it's just been 3 pure months of drawdown, then maybe it's easier. Okay. Jetin Thakur, hello mate, hope all is well. Been in a bit of drawdown at the minute, considering I'm only on month 4. Do you recommend me resetting or starting again, or continue on this one? Darwin FMRH. So again, two questions exactly the same. So my response stays the same for the both of them. Considering you're on month 4, let's take a look. Darwinex. FMRH. Okay, I mean, I'll be honest. I don't like resetting, and I'll tell you why. Because it's sort of the easy way out, right? In terms of, if you were to carry on trading this now, and yeah, it might take you 6 months, it might take you a year, and you come out of this drawdown, and then another year passes, and investors start looking at your account, and they're going, well, look at what happened the last time this person went into drawdown. They managed to work their way out of it. That gives investors a feeling of security, right? Whereas if your track record looks perfect and there's not been any real drawdowns, there's kind of a question mark above you, right? Where you go, well, you know, how does this trader act when they're in drawdown? How does this trader deal with tough periods? And the answer is you just don't know, right? So that's why I'm not a fan of resetting accounts. But I also understand that it's very easy for me to say that from the perspective of Darwinex, right? You're paying a subscription to use our service, and so of course it's a bit of a crappy answer coming from me. So if I put myself in your shoes and I say, well, I'm paying 38 euros a month, or however much you're paying, maybe you've got monthly payouts, or you paid for an allocation or something, which also would skew my decision. If you paid for a permanent allocation, then I would stick with this account and I would just try and work out of it. But I also understand that it would be easier to start, you know, wipe the slate clean, start again, start with a fresh mind, get rid of this history in terms of if you've made changes over the past couple of months and you don't want to see the previous history because mentally it's quite challenging for you and you feel like you're starting from the back foot, then yes, I get it. And I wouldn't sort of hold it against you for, you know, restarting the account. But it just completely depends on your, how you feel. Like at the end of the day, this needs to be, you need to view this and your track record as kind of a 5-year thing. Okay, so am I going to be bothered about this drawdown in 5 years? No. Okay, am I bothered about it in 1 year? No. Am I bothered about it in 6 months? If you say yes, then maybe it's time to restart. But again, I can't make that decision for you guys. It's completely down to you. The thing is, drawdown is normal. Months in drawdown is normal. Quarters in drawdown is normal. Yearly drawdowns. People do say it's normal. I mean, it happens. You can have years where you're in negative performance. It does happen. Generally, if you're trading over a long career, like if you've been doing it 10, 15, 20 years, odds are you're going to see a poor year. But I would say at kind of the year, usually most traders have the ability to stay positive year on year if they're, you know, if they have a positive expected value anyway. Casey Courtney, welcome. What's your strategy creation look like? I primarily like swing trading, trend following strategies. Are you asking directly to me, like how I build my own strategies for my Darwin? I'm presuming that's what you're asking. Or are you asking more kind of generic? Clarify that, and again, I'll answer your question for you. So okay, yes. So my strategy creation, I use code builders, right? So I think of an idea, something super simple. I choose 1 or 2 variables that are very, very easy to test and are repeatable over time. Rather than building some all-power EA or all-power strategy that does everything right, I'll build little strategies, test them on multiple assets, multiple parameters, make sure that it's not overfitted to any given one, ensure that it's repeatable and stable is the main thing. So I have I've got a ton of strategies, but some of them are super simple. So the one example I always give, because I think it's the most interesting, is there's sort of zero analysis to it other than if Friday closes bearish on the S&P 500, I buy the cash open on a Sunday evening and run it for 1-to-1 risk to reward with a stop below the low. That's all I do, right? But that's a variable that I've tested and identified, and it has a positive expectancy over like the past decade. I don't then think, well, why is that happening? Do I need to get a specific level? Do I need to make it better? I don't really care. I found the variable. I found that I can exploit it for, you know, 3 or 4% over an 8-year period with a very minimal drawdown. So it has a place in the portfolio. And I just do that again and again and again. I'll try and find different variables. I don't always look at, like, in fact, there's not many of my strategies that will analyze a chart or analyze price. The only ones I have is I trade inside bars on a daily on a few different assets, and I trade breakouts as well. So there will be you know, highs and lows of certain assets, but just go on. I usually have periods where I dedicate like a week or 2 to strategy testing, and I would just build, test, and then it will go to the breaking the strategies period, where when I'm testing, my specific job is to break the strategies. If I can't break them, they pass that test and they move on to the next step, which is, okay, how do we optimize the risk on this system and how do we get it into the portfolio? So that's what my creation process looks like. But it's, like I say, each system is super simple. I also have another one which is again super simple. It doesn't seem like you use indicators at all. Barely. I think I have a couple of mean reversion strategies that do have influence from a couple of indicators, but that's probably like 4 or 5 strategies out of the 27, so not a lot at all. Another strategy that I have, which again, this is kind of my intellectual property, so I hope you all appreciate this. One of my strategies measures weekly bars on the NASDAQ cash. If there's 3 bearish bars, it will then, if there's 3 bearish bars and then a bullish bar, it will buy at the end of that bullish bar with a stop below the low of that period, and it will run it for like 12 to 1 risk to reward. So, but that executes like once a year, if that. But again, that's a random variable. That's not something you can find on a chart, really. Well, I guess it is because it's a candlestick chart, but it's not like, oh, there's a pattern here or there's an indicator there. It's like, okay, if X happens, then I do YZ or something. Yas said, how is it normal that my signal account is at 16%, but my Darwin is at only 4.7%, while my drawdown are close to the signal account SSQV, if you can check it out. That sounds to me like you might be grid trading or martingaling. Please correct me if I'm wrong, because I don't want to make assumptions and be wrong. But usually what happens is if you have an element of grid trading or martingaling, your master account or your signal account will work out and make a profit, but your Darwin may have closed some of the exposure, so it's not going to make as much profit on that trade as your signal account will, leading to a lower profit, but the drawdown will be virtually the same because it still has all the downside of those trades. Okay, VCA, you are trading. I mean, this is going to be tough, right? Because we don't know. We don't know which trades are new in 2025 and which trades are old. But it looks like you've got this locked as well, so I'm not going to be able to see. There's not a lot we can take a look at really there. You have a low win rate, so I'm presuming that you have a sort of a higher risk to reward strategy. And I'm also making the assumption that the majority of your money or profit this year has been made on indices, right? Because you've had a positive year, but your return on commodities is negative. So I'm presuming that you're primarily focused on indices now, as it's 93% of your total trading. 28% win rate, like I say, super low, but I'm presuming that you have a high risk to reward, which we can check here. So 2.4. 2.4 to reward versus win rate. So you're risking 1 with pretty much a 3 to 1, just under 3 to 1. What was it? 2.4. Okay, so probably close to a 2. So your break-even win rate is about 33%. So what that means is at your current risk rate, I mean, let's say 30%, right? Because you're somewhere in between 2 and 3. So your break-even win rate basically is around 30%. Now, what that means is you have to win 30% of your trades at least just to maintain break-even. As soon as you start winning 35, 40% of your trades, of course, because of your win rate, you're going to be profitable. So I think, again, this is going to be skewed because we still have your trades from, the previous years, but your win rate is 28.77%. So you can see with that win rate and that payoff ratio or that risk to reward, you are still in the, you are still below what's needed to be break even. Just bear with me for 2 seconds, guys. I'm going to be back with you in literally like 1 minute. I'm back. No same risk. Okay, yeah. So are you saying that you don't grid or martingale into any trades? You just trade the same sort of setup with the same risk? Is that what you're saying? Okay, Anno, Nasdaq 100% since 2025. How can I unlock this? How can you unlock what? The strategy is 100% algorithmic. Only long, short, long, no stop loss or take profit. Okay, it's a little bit tough to kind of go over this because the behavior is so different. How can you unlock? You have to do it through your Darwinex interface. So not on Darwinex 0, you'd have to go into Darwinex. And then there's like a setting that you can toggle to show this information. I wouldn't do it like if you're not bothered. It's only for the purpose of this. Obviously, like here, I can't see the assets that you're trading, although we know that this is likely to be the Nasdaq. The problem is there's such a skew on information here. Like if we look at this, your maximum, we can't even use these because that's taking data from 4 years ago, or 4.5 years ago, which is so different to the information now, right? Again, your value at risk. I mean, this is looking decent now that we're back down at 13% because your value at risk before was up 71%. So I'm presuming that you've been dropping your risk since earlier this year, unless that's, I don't know. That seems quite a harsh drop. I don't know, but I like I say, I'm struggling really to kind of take anything from this of value, just because we still have all of this data in here. So from this period and this period, so it's just really difficult. Can you please have a quick look? FMHR. I did have a look. I did have a look at FMHR. Yeah, I did look at that. I think I did anyway. I did load it, didn't I? Oh, maybe I didn't. FMHR. I'm presuming this is still in calibration then. Presuming FMHR is still in calibration. Oh, I'm typing in the wrong thing. What an idiot. FMRH. What a sausage. Yeah, this one. Me personally, I'll be honest, I'd probably restart this, unless you paid for a permanent allocation, which it doesn't look like you've done, because you've only had one seed capital, which was this 30K. Yeah, I'd put me personally, I'd be wanting to start a clean slate. The idealist in me is like, no, work out of it, start again, but you've kind of got nothing to lose. You've got no active AUM. Your track record, I mean, it's 5 months. It's 5 months old, but yeah, I'd probably restart this if it was me. Every investor into XAQP will get access to the program that you wrote, right? Don't know about that. Hold on, which program are you on about? You on about the XAQP source code, or are you on about the trade journal that I built? Because if you're on about the trade journal I built, then hell yeah. I think I'll probably give that out to you Darwinex guys for free, or at least give you beta access anyway. No, the journal. Yeah, I've actually made some, I think I made some changes on that today. So I've made this adjustable, so you can basically move this sort of stuff around, choose what you want to display. For some reason, it's not letting me do it. But you can change this, so you can change your dashboard, etc. What I want to do is, I still need to build some stuff out on it, is be able to get, once a week or once a month, run an AI analysis on your journal, tell you what you've done well, what you need to improve, all that sort of stuff. And then also I want to build out this, which is like an AI mentor mode. I also have some cool ideas that I want to build into it. But again, I just haven't decided if I want to commercialize it yet, or just keep it for myself. Because there's a lot that I want to build that I will use that isn't quite out there. But then it's like, if people want to use it, of course, it makes sense to commercialize it, right? But here would be like an advanced self-review where you're talking to an AI, has access to all of your trading journal information. So you can talk about it like, what did I do? What did I do well last week? You know, upon reflection, what did I do poorly? Like, is there anything that I can do to improve? And of course, it will see all your trading data, so it will understand and know what to suggest to you. So I think that's really cool. But again, it's going to take quite a bit of building yet. And then this is my most proud thing, is the Monte Carlo test. I'm not sure if I've shown you this yesterday, but just randomizing your outcomes and seeing what the variance is. Of course, you want the variance to be as little as possible. The more data you have, like the longer term. So my Monte Carlo on my backtest report, which is like 8 years in length, is super tiny variance on it all. Whereas because this is just 6 months worth of data, the variance is slightly larger on the randomized outcomes. You can do more. I tried to do well, no, I did do a, what do you call it, 1,000 Monte Carlo simulation earlier, and it basically crashed my computer. So I won't be doing that again. That's super cool. You get the confidence levels down here as well. So yeah, maybe that's something I'll give XAQP investors for free, maybe, for sure. But yeah, back to FMRH. Yeah, if it was me, I personally would restart, I think. Yeah, but that's it's just a unique situation. Jason Ball, my account is similar. This is because my drawdown was at the beginning of my trading and the multipliers dropped since drawdown. So my drawdown was at 0.8x and my gains at 0.46x. Yeah, I think I've seen your Darwin a few times, because you're Canis Lupus, right? Unless I've just doxed your I've just doxed your, what do you call it, your pseudonym. I've just told everyone who you are, so I apologize for that. Yes. Oh god, the pseudonyms. VXSQ. Let's take a look. VXSQ. I think I've got you bookmarked. No, I mustn't have. Which means VXSQ lupus. Yeah. I just bookmark everybody that I have. I have a whole list of people here, mainly influencers who I like to keep track of and see how they do. Yeah, I have a load of influencers on there who I keep track of, so I can check in every few months, and usually they all follow the same path. Just saying. I don't think this is too bad, dude. Honestly, July till October, 8% return. I mean, there's nothing to snuff at there, really. One down month. Your down months are, or at least if we ignore July because you started at the end of July, your down month, you lost less on your down month than you've gained on both of your agreements since. So I don't think this is anything to be ashamed of at all. The thing with this, right, is, and the reason you shouldn't obsess over your equity curve is because this always looks a little bit harsher when there's less data. So let me find an example. See if this is one of my accounts. I think this had a, did it? Yeah, so if we go first couple of months, like if we look at that in isolation, that period doesn't look that nice, right? It's just, I'm in drawdown, then I'm in stagnation, then back into drawdown again. But over time, as the record grows, oh, I need to click zoom out. As the record grows, this becomes more and more insignificant, right? So what I'm saying is, you might be looking at this thinking, oh god, this looks awful. Half of it's, or over 50%, I was in drawdown or in negative equity, so it just looks a bit crappy. But then in 6 months' time, it might look like this, right? And that period of red, because at this point, right, that would have also been 50% red for me. So visually and mentally, it's a difficult thing to look at day in, day out. But over time, it sort of rectifies itself. I don't think, I think XAQP also went in the red at the very start. I think. Did it? Yeah, it did. So again, oh no, there's no way to see that really. Maybe Yeah. Oh, so it was only in the red for a couple of days, but even so, the point still stands is that like over time, this sort of thing kind of goes to the back of your mind. I guess that's a really long about way of me saying, don't judge too harshly, because I don't think this is bad at all. Jatin said, gotcha, thanks. Lastly, since you're having a look at it anyway, could you please tell me if the strat needs major adjustment? Yeah, let's take a quick look. Fernando Vargas, did you see the promotional incentive from Darwin with more than 6 months? It will be 25 allocation, right? That's correct. So if you haven't had a DarwinIA allocation within the first 6 months, then yes, we are giving out 25,000 euro allocation. That's correct. Yes, Leo, I haven't forgot you. Let me. Oh no, you already loaded up. That's fine. I mean, the strategy definitely needs work, right? If this is reflective of the strategy longer term, then yeah, it definitely needs work. Like, it's very difficult for me again to be like, you need to do XYZ, because all of the data kind of points to the downside, right? Same as if it's just a winning trader who does everything right. You kind of can't tell them what to do. The only thing I would say is try and work on your win rate slightly. So I stand in a camp that not a lot of people do. I think win rate is super important, and I think people brush it off. Even people that I respect do this. They brush off the win rate and kind of treat it as not that important, because if you get the right risk to reward, it will pay for itself. And whilst mathematically I agree, in practice that is a hell of a lot harder than it's easier said than done, saying, oh yeah, well I trade with a 20% win rate, but I need a 5-to-1 risk to reward. There's not many traders who can hold a 5-to-1 risk to reward or consistently find 5-to-1 risk to reward trades. So what I would do is go through your journal. If you haven't got one, I would try and get one. If you're an algo trader, I would look at your source code, look at the logic, try and simplify it, and see, okay, how do we get more winning trades through the door, right? Because when you put this into perspective, let's take a look at your win rate as a whole. So 20.79%. I'm okay with a negative win rate. I'm okay with a lower win rate if you're making money. But if you're not making money, then you have to question, I'm wrong 80% of the time. Okay, so is what I'm doing actually a strategy? Is it something viable that is going to work moving forward? Because if you're right 21% of the time with an average payoff ratio of 3.48, so already that's a losing strategy, because you're not taking 5R. If you was taking 5R in every position, you'd be at break even, but you're not. So you need to find a way to balance that out more, in my opinion. I don't know your strategy. I don't know how you trade, but I would look at, instead of trying to find the bigger moves, try and find something that's a little bit more repeatable and something that has a little bit more of an edge in terms of, yeah, this is likely to play out. Generally, simpler ideas are better when it comes to that. So if you're trying to find the one golden goose egg that you've seen on Twitter and YouTube from a few influencers, odds are it's probably not going to work out that well. But if you're looking at something old school, like a Bollinger Band that's worked for the past 50 years, you'll probably find some form of repeatable edge. Might not be the best thing in the world, but you'll find something that, works for over the past 10, 20 years and probably gives you a positive expectancy over time. So play around with some new things. Do some testing. I'm going to plug Edgeful as well. I would take a look at Edgeful. Edgeful. I do have a code, but I'm not going to push it onto you because I don't really care, to be honest. But I would potentially take a look at Edgeful. So they basically give you reports and tell you the percentage of something happening over the past 5 years. It's not the best thing in the world in terms of, it's not going to fix all your problems, but what it might do is might point you in the right direction of looking for higher probability setups. So without sacrificing a higher win rate system, maybe lower it slightly. But what I'm trying to say is you might find a report on here. You can even do it manually that says there's a 60% chance or a 70% chance today that the S&P is going to move lower based on these different variables. And then if you're looking to get long, why would it make sense to get long if there's only 30% chance on that day that the candle is going to be green? So little things like that. Like I say, it's not a perfect platform, but it's a great place to start. to just get some quick reports and some quick statistics, and then try and incorporate that into some of your trading. It will help your win rate massively. That's my advice to you. Do I only use FX Blue or also MyFX Book? I do have a MyFX Book, but I don't use it anymore. I had a bit of a spat with them over email, probably about a month and a half ago, and so I don't talk to them anymore because the guy who I spoke to was just ridiculously rude. The platform I was talking about was Edgeful. This. The guy I spoke to from MyFX Book was just ridiculously rude to me. So I was like, okay, forget this. I'm going to track with FX Blue. And the reason I like FX Blue over MyFX Book anyway, MyFX Book is a far better platform. I will say that hands down from like an aesthetic perspective. It's just a better platform. It's quicker. It looks better, yada, yada, yada. But they incorporated a paid feature a couple of years back where it's like $50 for the year to have your account update every like sort of minute or so. And since they implemented that, they basically reduced the amount of times or the length between updates for the guys who've just connected their accounts for free. So my account hasn't been updated in like a month, whereas FX Blue still does it every few hours. So I just use FX Blue now. FX Blue and my Darwinex, of course. So my Darwin shows the risk-adjusted version. My FX Blue shows the standard version. I say standard. You know what I mean? The master version. Okay, number 79. Let's go. 79. So you're in the top 1%. 10% 800. 1% would be 80. Yeah, so you're in the top 1% just about of all traders in DarwinIA Silver, which is absolutely fantastic. That kind of gives you a great feeling, right? And believe me, from experience, it starts to get real the lower you come down in that number. When you start hitting 50, 30, 20, 10, like it gets real and you start to get like a real competitive edge come out of you. But congratulations to you, dude. I mean, at face value, this looks fantastic. It looks very, very similar to XAQP. I can't lie. We both started at pretty much the same time. I want to see if I can bring a side by side. This is my record, by the way. If you're unaware. Where are we? Our records look very, very similar. We're probably doing something like some similar stuff. That's interesting. But anyway, yeah. So, super great start. I mean, it looks similar to me. Like you had a good month in May and then a good couple of months here, which is fantastic. This is a concept that I've spoken about a lot recently. And sort of going into more algorithmic trading, I understand this a lot more. Instead of having drawdown specifically, you tend to have more periods of stagnation, especially if you have a portfolio of systems. Again, I'm making an assumption here. I don't know whether you do this or not, but this to me is stagnation. It's not drawdown. It's not like you're losing money consistently. It's lose win, lose win, lose win. Your portfolio kind of stays within this range, right? So it's just a period of stagnation. You break out of that. Again, a little period of stagnation here, nothing crazy, and then you break out of it again. So let's take a look at how many trades you've taken. Yeah, 8,800 in a few months. So yeah, you're definitely running either a HFT algo or a portfolio with a multi-strat portfolio, which explains how nice the curve is or why the curve is so nice. Okay, let's move to assets and timeframes. From your depth of experience, what would you advise beginning traders looking for an edge in the market? What would you tell them to focus on to shorten their journey to profitability? Oh, that's $1 million question. I don't think there's an answer to that. I think every trader is different. Like my honest answer would be you need to find your path. So there's no sort of golden nugget to a specific edge. You need to find the path that works for you. Some people are built to swing trade. Some people have the personality to scalp. Some people prefer algo trading and building portfolios. I was a discretionary swing trader, intraday swing trader for 7 years. I had some success I also had down periods. I then switched to algorithmic portfolio building. My record's just over 6 months, but it was about 8 or 9 months ago when I made the switch. Best decision I've ever made in my life. I'm far happier. I enjoy trading a lot more. And it took me 7 years to find the path that I should be on, right? So with that in the back of my mind, I don't think I can give a solid answer to that. I think you just need to try different things, test different things, and rather than doing everything with the idea of how do I make the most amount of money now in terms of like how am I going to make 40 grand next year, 50 grand next year, 100 grand next year as a trader. Instead be like, how do I get to where I'm going to be the best trader possible? Okay. Because again, it might take years and years and years for you to get to that point where you actually feel like you're on the correct path. But when you are, the growth can be exponential. So again, a bit of a, I mean, I feel like I pussied out of answering that question really, but it's just the truth. I think it's all about the path that you're supposed to be on and trying to find that. Okay, so 61% of trades on indices and 39% on commodities. 82% win rate on both. I mean, it's a hell of a lot of trades here, dude. I'm presuming that you're doing some form of HFT. Yeah, 76 trades. 76 trades a day. Oh my life. I hope you don't have MetaTrader notifications on because your phone will be pinging off all day. 17% return on indices and a 9% return on commodities, which would tell me that you are you more efficient? I don't think you are really. No, I'd say you're probably more efficient on indices, but there's not a lot in it. So what I tend to do here is I look for efficiency when it comes to assets. So what I mean by that is, whilst you might be positive on both assets, like if we looked at this, for example, and your commodity return was 20% and your indices return was 10%, but you had such a differential in the amount of trades, I would go, well, you've made 20% with 3,000 trades and 10% with 6,000 trades. There's an efficiency deficiency there because you're clearly trading the one asset far better than you trade the other, which is fine. You just need to understand that because then you can implement dynamic risk and you know how to trade a specific asset differently to another asset, in my opinion. I'll take a look at ROZF in a moment. I feel like I've looked at that recently. ROZF. I feel like I've looked at that recently. But because there's not much differential between the trades and the return, yes, indices is slightly more efficient, but I don't think there's anything to be concerned about. You have a positive expectancy clearly on both. There's nothing to be concerned about. How are we doing, Moise? Hope you are good, dude. Again, I said this yesterday, and I'm going to reiterate my point. I actually think this stat is pretty useless now. The only reason I think it's pretty useless is because, and this is on us, we don't identify whether this shows where you open or close a trade because it calculates opens and closes. So you can see there's like double the amount of trades that you've actually taken here, but it doesn't say whether you'd closed or opened the position there. So it's very difficult to take actual insights away from that unless you highlight, okay, this is where I open the position or this is where I close the position. Again, one of my favorite statistics this is. So I look at efficiency by weekday. And it's clear as, clear as anything. Monday's your best day by far. You have 2 losing days, although they're relatively break even. I would be looking at why does Monday and Friday outperform the other days so much? Because there's a massive gap of performance here. Okay, without Monday and without Friday, you'd pretty much be a break-even trader on the other 3 days. So I'd be looking at like, what is the cause of this? Why is Monday and Friday such periods of high performance? Could it be that you execute more trades on that day, close more trades on that day, you do something specific on those days? It's a little bit different for you because, well, I'm hoping you're not manually executing 75 trades a day because that's a lot of mental clarity that you're going to be taking up on the charts. But so I'm presuming it's an algorithm. Is there something that's affecting the algorithm that it looks for specifically on these days? I don't know. If you're a discretionary trader, I say look at your routine and your behavior as a trader as well. Like, what do you do on those days around trading? Are you away from your desk when you should be focused on the market, etc., etc., etc.? For you, it's very unique, but this It's not a concern because it's working, but what happens if, like, where's my pen? What I'd be asking myself here is this down here is 60% of your performance, right? So that's 60%. This is 40%. Okay, because we've got 3 days and 2 days. So out of 5, 3 days is 60%. Out of 5, 2 days is 40%. Okay, so if one was to change to the other, it's highly probable that it would be these as opposed to these. Like the gap between these is less than the gap between these and these. So this is more of an accurate representation, in my opinion, of your performance from a consistency perspective. Now, if these trickle along as they are over the next few months like this, but then your performance dips on a Monday and on a Friday, you're starting to close this barrier, and it's a bit of a concern because at the moment you're reliant on the micro as opposed to the macro. Whereas if all of your days were kind of, I don't even know if I'm making sense at this point. I am in my own head. If all of the days were like this and there wasn't much variance between these and this, then I'd be like, yeah, absolutely no problem. But because you've got two major winning days, I'd be trying to identify what causes this. If it's something specific and you go, that's why, because of the news events that happen on a Monday and Friday specifically, or because of X, Y, Z, you can go, okay, well, let's apply dynamic risk again. Because if you know that you have a higher expected value on these days, should you risk the same as the days where you have a much lower expected value? I would argue no. A lot of people don't agree with me, but again, usually it's beginners who've done 1 or 2 courses who go, no, you should risk the same every trade. I don't think that's right. It's personal opinion, personal view, so don't shoot me down for it. But it's all about, in my opinion, it's all about identifying where you're less efficient, where you're most efficient, and applying a dynamic risk model to that to ensure you're putting your foot down on the gas when you need to. Okay, so 82% win rate, but your average payoff ratio is 0.28. So I'm presuming that it's some form of I don't want to say tick scalping or HFT, but that's sort of the, oh no, it can't be, because your average trade duration is like hours. So maybe you're just, are you grid or martingale? I mean, I don't know if you are, but no, it doesn't look like you are. I don't know what you're doing, but whatever you're doing, it's working. There's a big outlier there. So again, I'm not, this is a concern to me. This trade here, purely because, I mean, I'm not a massive fan of outliers when it comes to data, because a lot of your return has come from this trade. Okay. Now, what I would be asking is, how frequently do these trades reoccur? Because if this goes on the way it has without that trade for the next 2 years, are you still waiting around for this trade to happen? How much of this trade was luck? How much of it was skill? How much was it, did you stick to your plan? Did you execute, and did you do the same thing that you do on that trade as you do on these trades? Because if the answer is yes, then you have to figure out, why did this trade run so much farther than this trade and these trades and these trades and these trades? Even the next bigger trade, like your next biggest trades, they're still pretty much double the size from there. Okay, so did you follow plan? Yes. Okay, well, why aren't you following plan on these other trades? Okay, because surely if your plan is to get up to, run your trades for that far, then why aren't you doing it on your other trades? If you say, did I follow my plan? And the answer is no, you go, well, this is kind of a red herring, and it's not representative of, your trading ability or your trading plan long term, both of which are kind of issues. And that's why I don't like these things. I'm wondering if there's a hotkey for me to delete my is there a hotkey? Control shift and 7. Oh god, my hands aren't going to stretch that far. Fernando said, should I open another Darwin? Let me take a quick look for you. RZF. Could you please analyze my Darwin as well? Moise, I'll have to do it another day. I've got to go and pick my daughter up within the next 5-10 minutes or so. So if you want me to do it privately, I'm happy to do it privately. We can either do it on a call, or I can send you a recording of me analyzing it, or we can do it on the next live stream. I'm more than happy to do that as long as you get the analysis done. But I do have to leave shortly to go and get my daughter. I would do it quickly, but I also don't like doing that, because I think anybody who wants their Darwin analyzed deserves to have the proper experience, proper me going through with a fine tooth comb, as opposed to just saying, yeah, looks good, yada yada yada. What's your thoughts on grid averaging martingale no-go area for profitable traders? Depends. I'll answer that question in a moment. What do you think about my Darwin ROZF if I add a trend following strategy? It could help. Don't touch it if it ain't broken, is what I would say there. I don't think there's any need to add anything to this unless you're building a portfolio of strategies. I wouldn't bother. Don't start messing with stuff. This is going super well. If you want to add a trend following strategy, or you find something that's working well, again, it's completely down to you. It's completely up to you. Again, it's easy for me to say, add it to another account, when it's our business that you'd be doing it through. So I'm probably not the best person to ask, because that'd be saying double your subscription cost. And I don't think it's fair for me to give you that advice. That is a decision that you should make. However, I also feel like I have a responsibility to tell you not to F this up. This is going well. Don't add things for the sake of adding things. Maybe test it somewhere else first, whether that's a demo account, or if you want the proper experience, test it on Darwinex Zero, and then maybe collate those accounts later down the line. But personally, if it's working, if it ain't broke, don't fix it is the old saying, right? So that's what I'm going to say as well. Awesome, Moise. I appreciate that, dude. So back to the back to the grid martingale question. So I grid / martingale trade on this account. Okay, so this takes all of the same trades as XAQP does, which is my main portfolio, but then I also have a martingale strategy running on it too. So this is my MetaTrader account. So you can see these are all the assets that I martingale / grid trade. The way I grid trade them is as sort of like with a carry trade logic. So you can see all my swaps are massively positive here, or for the most part. I think I've got rid of now all the negative swap pairs. There's one there, Aussie US. Oh, that's changed recently, so I might have to take a look at removing that. Yeah, Aussie US. Oh, there we go. So the idea is, for example, where's GBP SEK? I've been sat in pound Swedish krona since the 26th of August. That's when it first started trading that. You can see I'm offside on those trades, although I'm running it at a low risk. But then if you look at the swap fees, $15, $12, $12, $7, $6, $4. So it's pretty much already paid for the drawdown on that trade. And I've been in that for, how long is it? Been that in 2 weeks, 3 weeks, 3 weeks or so. I'll show you the chart too. So 3 weeks or so, the swap has pretty much, or the carry has pretty much paid for the trade where it is now, but it's nowhere near its target. So it's just GBP SEK is just in this horrible range at the minute. But the longer it's in this range, the more I get paid on the carry trade. That's fine. If it goes lower, then yes, I add size. The target is up here. So if it hits that target, of course, the positions will make money. So will the carry. So I do this as a hedge to my XAQP positions. Like I say, this account still takes all of the same trades that XAQP does, but it has that additional layer of the carry trade swap system, or the carry trade grid system, I should say. So you can see the max drawdown is worse than XAQP. The return is also worse, although the record isn't as long. So I don't think it's fair to compare apples to apples there. But it does well. I also, when it comes to Darwinex specifically, if you're trading purely a grid / martingale system, it's going to fiddle about with the risk engine. The risk engine's not going to like it because they're working against each other. Because the more exposure you have at your signal account level, you keep adding size, you keep adding that exposure, right? Because you have to work out of the drawdown to make a profit. Whereas the risk engine will be looking at that going, well, this trader's deleverage is getting too out of control, so we're going to shave off some of the position. So it directly works against the notion of adding more exposure to make it turn into a winner. So it can cause this kind of rift between the two where they're working against different things. I feel like I've found a cheat code with BYXB because I also take the XAQP trades at a much larger size. So if we take a look at my value at risk, actually, I haven't looked at the value at risk of this for a long time. So for a martingale strategy, it has a very low value at risk to begin with, but it's super, super stable. And the reason it's so stable is because I run the grid at such a low risk and run XAQP at a much higher risk. It takes XAQP as kind of the base value at risk, right? And the grid trading stays so far beneath that level. Of course, there's always a chance it could spiral out of control. I get that and understand that, but I keep it at such a low level in comparison to XAQP that the value at risk and the deleverage doesn't ever become a concern. So to answer your question, I would say it's a no-go, especially if you're managing investor capital outside of Darwinex. So, of course, Darwinex has a risk engine that even if this goes into some nasty doo-doo, and starts losing money, we know that the risk engine will step in, intervene, and stop the investors who allocate capital to this Darwin from, hemorrhaging their account. If you're managing capital on the outside, a lot of traders will just go, well, just wait for it to work out of the drawdown. And that's not always going to happen, as we saw with Waka Waka, right? Well, no, that's a lie. Waka Waka did work out of the drawdown, but it went into a 70% drawdown, stopping a lot of people out, especially people who were leveraged up on that. So, yes, it's a no-go, but yes, you can also make it work if structured correctly. Okay, last thing here is your value at risk. So you're currently sat at 36.9. Again, I'm going to draw the same chart that I've drawn the past two sessions, where we have value at risk down here, value at risk, and we have chance of blow. Oh, what on earth is that? Percentage chance of blowing your account up here. I'm gonna. That's supposed to be fire. That's supposed to represent blowing your account. Percentage of you blowing your account, and this is the value at risk. So we've got 1, 2, 5, 10%, 20%, 30, 50 plus, let's say. Okay, so this is measuring your value at risk percentage, which is this. Okay. Now, what we've seen over the past 12 years running Darwinex is that it goes like this. It's a very gradual growth. The chance of blowing your account at these levels of value at risk is very low. Okay, it starts to increase gradually. Then as you hit 30% value at risk, what happens is there's an exponential growth like that, or an exponential rise in chance that you're going to blow up your account or go into some nasty drawdown. And when I say blow your account, I don't necessarily mean you have to go down to zero. But again, like Waka Waka did. I think Waka Waka was at about 30 or 35% value at risk, maybe 40. And he didn't blow the account, but he went into 75, 80% drawdown, I think, at the peak. Because as soon as you cross that barrier, the chance exponentially increases. So what I always say to people, especially if you're around 30, is try and bring this down slightly. So 30% is going to be roughly there for you. Just try and bring that average value at risk down slightly. To do that, just lower your position size. It doesn't have to be anything crazy, especially for you, because you're only at 36.98. And it looks like you hover below 30 anyway, usually. Yeah. So usually around 30%, you're kind of at the highest you've ever been now. I just try and work a little bit over the next month on trying to bring that back down below 30%. And at least you're in this kind of safer threshold then. It's not to say that you won't blow your account if your value at risk is under 30. And it's not to say that you will blow your account if it's over 30. But statistically speaking, you want to be on the best side of probabilities, right? And the best side of probabilities of not blowing your account is when your VAR is below 30%. So we're going to wrap it up there, guys, because like I said, I have to leave, 2 minutes ago. So we're going to wrap it up there. When is the next live stream? Most likely Tuesday, although I'll see if I have some time tomorrow. Fridays are usually busy because I have to write a load of email content for Darwinex and Darwinex Zero in the morning. And then usually on the afternoon, I have a load of admin tasks. But if I get a chance tomorrow, we can hop on and do another live stream. If not, maybe Monday, but definitely for sure on Tuesday. So guys, I hope this has been of value to you guys for watching. You know, thank you all for coming. It's been quite an active session today, which has been fantastic. I always like seeing you guys and you know, having a chat with you whilst I'm going through this sort of stuff. So it's been a pleasure as always. I hope you all have a fantastic rest of your morning, evening, or afternoon, nighttime, wherever you're watching this from in the world. Which just reminds me, we haven't seen JC in a while, because he usually watches at like 2 a.m. We haven't seen him in a few weeks. So have a fantastic rest of your day anyway, guys, and I will catch you in the next stream. Peace out. Thank you all for joining.